The Reserve Bank's been providing economic services for the people of New Zealand for decades. The story of how that unfolded, and of the Reserve Bank's role today, is told in the Reserve Bank Museum and Education Centre.
This £50 note from the 1920s clearly demonstrates the impact of inflation. The 1920s it was worth $100, but today, because of inflation, you would have to have $5,000 written on that note. So keeping the public confidence in coins and banknotes, as well as low inflation, are key components of a successful economy.
An economy is about everyday people. It's about each and every one of us. It's the sum total of all we do to make, buy, sell, or exchange things. Banks appeared in New Zealand with Pākehā settlers in the 1840s. Many were branches of Australian banks, and they operated wherever settlers needed them, including the goldfields. However, there was no central bank or any single authority to issue currency.
Before the Reserve Bank was established in 1934, each bank issued its own notes. The oldest one we have in the museum is this one from the Union Bank of Australia, which dates from 1842.
In 1934, New Zealand's Finance Minister Gordon Coates founded the Reserve Bank and gave it the job of stabilising the economy and providing, through currency, its means of exchange. The bank's been doing that job ever since, although the focus of that stability has changed over the years. From the mid-1960s, New Zealand faced a new problem: high and erratic inflation. Money was losing its value. This hurt businesses and hurt people. Nobody could anticipate how prices might change.
You can see the impact of inflation over the years. So if we take $100 of goods and services in 1967 and then see what it was worth in 1990, that same $100 basket of goods and services is now cost $1,047. Inflation had meant that prices rose nearly 1,000%.
There'll be a very sharp and substantial...
Finance Minister Mr. Roger Douglas and his top advisors...
Since the late 1980s, the focus of the Reserve Bank has been on price stability.
If we do the next 23 years, from 1990 until 2013, the basket of goods of $100 has now only gone up to $162.
In 1990, New Zealand was the first country in the world to formally adopt inflation targeting. Other countries have since followed suit. The Governor of the Reserve Bank and the Minister of Finance sign a policy targets agreement that defines price stability.
The Reserve Bank's role is to keep inflation low and stable, to have stability in the general level of prices, and that gives people the ability to plan better, and that's likely to create an environment in which investment and saving decisions can be better and the economy can grow over the longer run more strongly.
Since 1999, the Reserve Bank has controlled inflation by setting an official cash rate. This rate is reviewed 8 times a year, 4 of them in association with a monetary policy statement and media conference.
We want to keep inflation expectations contained.
Predicting and measuring the economy is a complex task. In the late 1940s, New Zealand economist Bill Phillips created a water-driven computer, the MONIAC, which modelled the British economy. This was the first computer in the world to forecast economic developments.
So what we're going to do now is we're going to do a scenario in the machine, and then we're going to see how that flows all throughout the economy. So increase taxes, shut off government spending. Immediately what we can see is that the government surplus grows.
The only working example of this machine in the Southern Hemisphere is in the Reserve Bank Museum and Education Centre. The MONIAC helped pioneer economic modelling.
There is no water or money flowing from the government. One change over here can have lasting effects, and this is what this model is able to demonstrate.
Today we model the New Zealand economy using mathematical simulations. These contribute to a forecasting system enabling the Reserve Bank to set the official cash rate. This keeps inflation within an agreed target band. A major role of the Reserve Bank from its founding has been to help maintain a robust and sound financial sector in New Zealand.
Financial stability is important because people need banks and other financial intermediaries in order to save for their retirement and store money for other reasons. And then there's other people who are looking to borrow money, perhaps to buy a house. And the economy is always going to struggle if those activities are difficult. So if there isn't a sound banking system there for people to undertake those activities.
The oversight role of the Reserve Bank has increased in recent years and expanded to include non-bank financial institutions such as some finance companies and the insurance sector. All these help the Reserve Bank maintain a healthy and stable financial system for New Zealand. The Reserve Bank's been providing banknotes for New Zealand since 1934 and coins since 1989.
So these are our first distinctive New Zealand banknotes, which were issued in 1934.
The full story behind the Reserve Bank's functions and how they developed from past to present is told in the Reserve Bank Museum and Education Centre.